In the last episode, I talked about how parents can start teaching their kids about investing even at an early age. Introducing kids to investing concepts can have a powerful effect as they grow up. It gets them familiar with the idea of growing money, which means that when they save money, there are ways to make it potentially increase in value. And in episode 1, we had talked about a company that had come up with a pretty amazing invention for pet owners. This invention is a cat collar with a speaker that allowed a pet owner to actually call their cat home for dinner. It's called the Kitty Come to Dinner Collar. So let's talk about investing in this company. To start off, let's say you're a pet owner and you buy one of these collars just to kind of try it out. And much to your surprise, it actually works. It works great. After you buy this collar, you start to notice that some of your neighbors that are also cat owners are buying them as well. And people are talking about them. Then you see that there's a store in the mall and they're selling these collars. Wow, you think, maybe this company is really doing well. I wonder if they sell stock. If they do, maybe I could invest and buy some stock in this company. If the company does well, maybe my stock will go up in value. So it turns out that you can buy stock in this company. It's $20 a share. So you decide to buy 5 shares. 5 times 20 is $100. So your total investment is $100. Now you are an investor in this company. And let me just say, if you like this video on kids and investing, please help me keep the YouTube algorithm happy by tapping on the subscribe button and also the little cute bell icon. A thumbs up keeps me motivated as well, so thank you. So guys, in this video, we're going to see how this stock does over time. We're going to do a simple diagram to show how the investment does over 12 months. This will make it easy to understand what can happen when one buys stock in a company. In this case, the Kitty Come to Dinner Cat Collar Company. So let's go sketch it out. Well, here's my sketch table, and it looks like it's dinosaur TV time. And no kids. Interesting. Where'd they go? Okay, so let's take a look at one possible scenario with this company. And again, you can go back to the original video, but this is the Kitty Come to Dinner Collar Company. Makes a cool little collar that calls the kitty to dinner. Anyway, let's take a look at this. Now, you get a lot of charts and stocks, but we're going to keep it really simple. We're going to do a little timeline down here with some dates. We're going to start with the month of January, and then we're going to go to February, March, April, May, and then we're going to skip all the way ahead to January. So we can take a look at the stock and how our stock does for a whole year. Okay, so what do we got? We started off, remember, we started off with $100 worth of stock. So we'll put that right here. $100 worth of stock. The first month that we've owned it, February, sales are good in the company. They seem to be doing quite well. So in this simple bar chart, we go up to a value of $105. So what we paid $100 for is now worth $5 more. It's now worth $105. Next month, same thing, still worth $105. And then we get to April. In April, we check our account, and all of a sudden, we find out that our stock is only worth $85. It's gone down in value. It's gone down quite a bit. Why is this? Turns out somebody else, a new competitor, came out with a collar that does the same thing. And guess what? It's less money. It cost half the price. It's made overseas somewhere. People are buying the other collar because it's cheaper. Why pay $40 for something when you can get it for $20? But the next month, our stock seems to go back up again, and now it's worth $100. So why did our stock go back up to being worth $100? Because that new company, that new competitor that came out that had the cheaper collar, guess what? The collar fell apart. It fell off of the cat. People couldn't find it. Didn't work very well. Sound quality wasn't very good. It was just a cheap imitator. So the Kitty Come to Dinner collar is back in business. It's doing well again. People are buying their cat collars. So let's go all the way out to January, full year, and it turns out our stock is now worth $110 a share. So what we paid $100 for is now worth $110. Now that might not seem like much of a big deal. Who cares if we spent $100 on stock and it went up only $10? Well, of course, when you invest in stock, you generally buy more than $100. This is just a basic illustration to keep it simple. Of course, as we said, investing in stocks does have its risks. Things don't always turn out in this pleasant scenario. So let's take a look at another one. And we'll do the same timeline. We'll come here, we'll take a look at 1 year where we start with January, and we go February, March, April, May, and we finish up 1 year down the road in January. Same exact company, Kitty Comes to Dinner Collar. Remember, we started off, we bought some stock. We bought $100 of stock in this company. And the next month, looks like we're doing pretty good. Stock went up a little bit, went up to $105. So our investment has gone up actually $5 for the whole bunch. Then we get to March. That new competitor comes out and our stock has fallen in value to only $85. April, we're hoping that things will turn around, but it turns out that this competitor is doing really, really well. Our stock is now only worth $60. We've invested $100, it's now only worth $60. We're not feeling too great about this. Then we get to May, and then another competitor comes on the market. Now there are 2 companies making a similar collar for about half the price. And the problem is people are buying those cheaper collars and they're working, they're holding up, and they're taking sales away from the original Kitty Comes to Dinner Collar company. Company can't compete. We go all the way out to January and our stock is now only worth $5. It looks like the Kitty Comes to Dinner Collar company is heading to bankruptcy. They cannot compete with the other companies. So our investment went from $100 all the way down to $5. This is not a great scenario. And this sort of thing happens with stock all the time. If you buy stock, you can get into this kind of unfortunate scenario, and it's important to realize that. So what do we do? Is there anything that we can do? Well, actually, there is a potential solution. And in this solution, we are going to buy what I call a bucket. We're going to buy a bucket of stocks. A bucket of stocks. Okay, and this is called a stock fund. It's called a stock fund, okay? And in a stock fund, you buy into the stock fund, and what you end up getting are all of these stocks, just a little piece of each one. You have many, many stocks. Maybe you have one company that's a shipping company, and then you have another company that sells drugs, and another company that sells fuel and things like that. So you have all these different companies, so your risk gets spread out among all these companies. What happens if one company really does bad? Say this company, say they go out of business, they do really terrible. Well, you have all of these other stocks in your bucket, and that protects you. So it's not likely that all of the stocks are going to do bad in your bucket. So that's called a stock fund, also called a mutual fund. And another name, sometimes quite popular these days, it's called an ETF, abbreviation for a complicated name, Exchange Traded Fund. And we'll get into that more later. But this is one potential solution so that you can enjoy the potential growth in a large number of stocks and reduce your overall risk. It turns out that investing in a stock fund, as in this example with the bucket of stocks, is actually very popular. Many people own stock funds in their investment accounts, retirement accounts. In the next video, we're going to develop this idea more and show how investing using funds can potentially grow one's savings over time. It's a very powerful concept. Hope to see you on that next video, and thanks for watching.